Welcome to today's lecture, everyone. As promised, today we're diving into the practical part of recording business transactions. We're going to start entering transactions into the general journal, step by step, using the scenario of Neelam Sultan's florist business, Bloom and Blossom. This will give you a hands-on understanding of how accounting works. In today's session, we'll keep things manual and focus on using a chart to record the transactions. But don't worry, this is just the first step. In the next session, we'll level up and input these transactions into some of the most popular accounting software, like QuickBooks, Xero, and Sage accounting software. This way, you'll not only understand the theory, but also gain practical, in-demand skills for your accounting career. Before we get started, a quick reminder, if you're new to the channel, please like the video and subscribe to support us. This helps us bring more lessons like this to you. Before we dive into recording transactions manually, I want to quickly mention something important. Manually recording business transactions is rare in today's world. Most businesses now rely on accounting software for speed and accuracy. However, learning to record transactions manually is still incredibly valuable. It helps you truly understand the process, the rules behind it, and how debits and credits work. If you find yourself struggling to understand the transactions or how to record them, don't worry. We've got you covered. Make sure to watch Chapter 1 and Chapter 2 videos that we've uploaded earlier. Those lessons explain the basics of transactions, the double entry system, and how accounts work. Reviewing them will definitely make this easier to follow. All right, now let's start recording Neelam Sultan's transactions into the general journal. Let's quickly go over what information comes at the top of the journal and how to structure the entries properly. What comes at the top of the journal? 1. Name of the company. Always write the name of the business, such as Bloom and Blossom. 2. Title of the document. Clearly label it as General Journal. 3. Date range. Include the period you're recording, like for the month of December 2024. This helps keep the journal organized and easy to reference later. How to record transactions in the journal. 1. Start with the date. Write the date of the transaction in the first column. 2. Debit entry. Record the account to be debited on the first line without indentation, followed by the amount in the debit column. 3. Credit entry. On the second line, indent slightly and record the account to be credited, followed by the amount in the credit column. 4. Description. Below the debit and credit entries, write a short explanation of the transaction, like capital invested by owner or paid for flower cooler. This format ensures clarity, keeps everything balanced, and makes it easy to review later. All right, students, let's record the first transaction from Neelam Sultan's florist business step by step in the journal. We'll go through each part of the process to make it simple and easy to follow. Transaction 1. Neelam Sultan invests $15,000 into the business. Step 1. Identifying the transaction. The first thing we need to do is identify what has happened. In this case, Neelam Sultan invested her personal savings of $15,000 into the business. This is the starting capital of the business. The transaction involves money coming into the business and represents the owner's contribution. Step 2. Checking the details of the source document. To record this transaction, we need to look at the source document. The source document here is the bank deposit slip or the bank statement, which confirms that Neelam deposited $15,000 into the business bank account. Always check that the document includes important details like the date of the transaction, the amount involved, $15,000, the nature of the transaction, owner's investment. This ensures that we're working with accurate information. Step 3. Determining the accounts involved. Next, we need to decide which accounts are affected by this transaction. Account 1. Bank account. This is an asset account because the business now has more cash in its bank account. Account 2. Capital account. This is an equity account because the owner is contributing money to the business, increasing the owner's equity. Step 4. Deciding debit and credit. Now that we know the accounts involved, we decide which account is debited and which account is credited. The bank account asset is debited because it is increasing. In accounting, an increase in an asset is always a debit. The capital account equity is credited because the owner's equity in the business is increasing. An increase in equity is always a credit. So, the entry will involve a debit to the bank account and a credit to the capital account. Step 5. Recording in the journal. Finally, we record this transaction in the journal. The journal is the first place where transactions are officially recorded, and it shows both the debit and credit sides of the transaction, along with a brief explanation. For this transaction, the journal entry would look something like this. Date. Record the date of the transaction, which is the day Neelam deposited the money. Accounts. Clearly write the names of the accounts involved, bank account and capital account. Amounts. Write the amount of $15,000 in the appropriate debit and credit columns. Description. Add a short explanation like owner invested cash into the business. Let's now move on to recording the second transaction for Neelam Sultan's florist business in the journal. As before, we'll go through every step so it's clear and easy to follow. Transaction 2. Purchase of a flower cooler for $5,000. Step 1. Identifying the transaction. The transaction involves Neelam Sultan purchasing a flower cooler for her florist business. The cooler is essential for keeping flowers fresh, so it is considered a non-current asset. She paid for this cooler in cash, which means money was deducted from the business bank account. So in this transaction, the business acquires a new asset, the flower cooler. The business pays cash for it. Step 2. Checking the details of the source document. The source document for this transaction is the receipt issued by the supplier of the cooler. This receipt provides the necessary details for recording the transaction, including the date of the purchase, the total cost of the flower cooler, $5,000, a description of what was purchased, flower cooler, confirmation that payment was made in cash. Always ensure that the source document is accurate and complete before recording the transaction. Step 3. Determining the accounts involved. Now, let's identify which accounts are affected. Account 1. Equipment account. This is an asset account because the flower cooler is a long-term resource for the business. It will help generate revenue over multiple years. Account 2. Bank account. This is also an asset account, but it decreases because cash was used to pay for the flower cooler. Step 4. Deciding debit and credit. After identifying the accounts, we determine which account to debit and which to credit. The equipment account is debited because the asset flower cooler is increasing. An increase in an asset is always recorded as a debit. The bank account is credited because the business used cash to pay for the purchase. A decrease in an asset is always recorded as a credit. So, we'll debit the equipment account and credit the bank account for $5,000. Step 5. Recording in the journal. Finally, we record the transaction in the journal. Here's how we do it. Date. Record the date when the flower cooler was purchased. Accounts. Write the names of the accounts involved, equipment account and bank account. Amounts. Enter $5,000 as a debit to the equipment account and $5,000 as a credit to the bank account. Description. Add a short explanation such as purchased flower cooler for cash. All right, let's move on to recording the third transaction for Neelam Sultan's florist business. As always, we'll go through it step by step so everything is crystal clear. Transaction 3. Purchase of fresh flowers for $3,000 on credit. Step 1. Identifying the transaction. In this transaction, Neelam Sultan purchased fresh flowers for her inventory, worth $3,000. Instead of paying immediately, she bought them on credit from a supplier. This means the business acquired inventory, an asset. The business now owes the supplier money, a liability. This is an example of a credit purchase, which is different from a cash transaction because payment will be made later. Step 2. Checking the details of the source document. The source document for this transaction is the purchase invoice provided by the supplier. This invoice contains all the details we need to record the transaction, such as the date of the transaction, the supplier's name and contact information, a description of the goods purchased, fresh flowers, the total amount owed, $3,000, the payment terms, e.g., payment due in 30 days. Always check the invoice carefully to ensure the details are accurate. Step 3. Determining the accounts involved. Next, we identify which accounts are affected by the transaction. Account 1, Inventory Account. This is an asset account because the flowers are part of the business's inventory, which it will sell to customers. Account 2, Trade Payables Account. This is a liability account because the business now owes the supplier, the creditor, $3,000. Step 4. Deciding debit and credit. Now, let's decide which account is debited and which is credited. The inventory account is debited because the inventory and asset is increasing. In accounting, an increase in assets is recorded as a debit. The trade payables account is credited because the liability amount owed to the supplier is increasing. An increase in liabilities is always recorded as a credit. So, we'll debit the inventory account and credit the trade payables account for $3,000. Step 5. Recording in the journal. Finally, we record the transaction in the journal. Here's how. Date. Write the date of the purchase. Accounts. Clearly state the accounts involved, inventory account and trade payables account. Amounts. Enter $3,000 as a debit to the inventory account and $3,000 as a credit to the trade payables account. Description. Add a brief explanation, such as purchased fresh flowers on credit, invoice number 67890. Let's move on to the fourth transaction for Nilam Sultan's florist business. We'll continue using the same step-by-step process to make everything clear. Transaction 4. Rent payment of $1,500. Step 1. Identifying the transaction. In this transaction, Nilam Sultan pays $1,500 for the first month's rent for her shop. This is a necessary expense for running the business. The business pays this amount in cash, which means the cash balance decreases. The payment is for rent, which is classified as an expense because it's part of the cost of operating the business. Step 2. Checking the details of the source document. The source document for this transaction is the receipt provided by the landlord or property manager. This receipt includes the date of the transaction, the amount paid, $1,500, a description of the payment, rent for the shop, confirmation that payment was made in cash. Always verify that the receipt matches the payment details. Step 3. Determining the accounts involved. Now we identify the accounts affected by this transaction. Account 1. Rent expense account. This is an expense account because the rent is a cost incurred to operate the business. Account 2. This is an asset account because cash is used to make the payment and the cash balance decreases. Step 4. Deciding debit and credit. Now let's decide which account to debit and which to credit. The rent expense account is debited because expenses increase and expenses are always recorded on the debit side. The bank account is credited because the cash balance and asset is decreasing. A decrease in assets is recorded on the credit side. So we'll debit the rent expense account and credit the bank account for $1,500. Step 5. Recording in the journal. Finally, we record the transaction in the journal. Here's how it would look. Date. Enter the date the rent was paid. Accounts. Write the names of the accounts involved, rent expense account and bank account. Amounts. Enter $1,500 as a debit to the rent expense account and $1,500 as a credit to the bank account. Description. Add a brief explanation such as paid shop rent for the month. All right, let's move on to the fifth transaction for Neelam Sultan's florist business. We'll follow the same detailed process step by step. Transaction 5, utility bill payment of $200. Step 1, identifying the transaction. In this transaction, Neelam pays $200 to cover utility bills, such as electricity and water, for her shop. This is a necessary expense for operating the business, so it is classified as an expense. The payment is made in cash, which reduces the business's cash balance. Step 2, checking the details of the source document. The source document for this transaction is the utility bill provided by the utility company. This document contains the date of the payment, the total amount due, $200, a description of the services provided, electricity and water, confirmation of payment if the bill was paid immediately. Ensure the bill's details are accurate and match the amount paid. Step 3, determining the accounts involved. Now, let's identify the accounts affected by this transaction. Account 1, Utilities Expense Account. This is an expense account because the payment covers costs necessary to keep the business operational. Account 2, Bank Account. This is an asset account because cash was used to pay the bill and the cash balance decreases. Step 4, deciding debit and credit. Next, decide which account to debit and which to credit. The utilities expense account is debited because expenses are increasing. In accounting, an increase in expenses is recorded as a debit. The bank account is credited because the cash balance and asset is decreasing. A decrease in assets is recorded as a credit. So we'll debit the utilities expense account and credit the bank account for $200. Step 5, recording in the journal. Finally, record this transaction in the journal as follows. Date. Enter the date of the payment. Accounts. Write the names of the accounts involved, utilities expense account and bank account. Amounts. Enter $200 as a debit to the utilities expense account and $200 as a credit to the bank account. Description. Add a brief explanation, such as paid utility bill for electricity and water. Let's continue with the sixth transaction for Neelam Sultan's florist business. And as always, we'll break it down step by step for clarity. Transaction 6, advertising expenses of $500. Step 1, identifying the transaction. In this transaction, Neelam spends $500 on advertising to promote her florist business. This includes both online and print advertisements. This is classified as an expense because it's a cost incurred to attract customers and increase sales. The payment is made in cash, which reduces the business's cash balance. Step 2, checking the details of the source document. The source document for this transaction is the invoice provided by the marketing agency or advertising platform. This invoice shows the date of the payment, the total amount paid, $500, a description of the advertising services provided, confirmation of payment if the invoice was settled immediately. Make sure the invoice matches the details of the payment. Step 3, determining the accounts involved. Now let's figure out which accounts are affected by this transaction. Account 1, advertising expense account. This is an expense account because the payment is for promotional activities to support the business. Account 2, bank account. This is an asset account because cash is used to pay for the advertising and the cash balance decreases. Step 4, deciding debit and credit. Let's decide which account to debit and which to credit. The advertising expense account is debited because expenses are increasing. An increase in expenses is always recorded as a debit. The bank account is credited because the cash balance and asset is decreasing. A decrease in assets is always recorded as a credit. So we'll debit the advertising expense account and credit the bank account for $500. Step 5, recording in the journal. Finally, record this transaction in the journal with the following details. Date. Enter the date the payment was made. Accounts. write the names of the accounts involved, advertising expense account and bank account. Amounts. Enter $500 as a debit to the advertising expense account and $500 as a credit to the bank account. Description. Add a brief explanation such as paid for advertising services to promote the business. Let's move on to the 7th transaction for Nilam Sultan's florist business. This time, it's a cash sale, so we'll go through each step carefully. Transaction 7. Cash sale of $1,200. Step 1. Identifying the transaction. In this transaction, Neelam makes a cash sale of flowers to a customer for $1,200. This is classified as revenue because it's money earned from selling goods, flowers. Since the customer pays in cash, the business's cash balance increases. Step 2. Checking the details of the source document. The source document for this transaction is the sales receipt issued to the customer. This document includes the date of the sale, the total amount paid, $1,200, a description of the goods sold, e.g. a bouquet or floral arrangements, confirmation that the payment was made in cash. Always verify the sales receipt to ensure all details are accurate before recording the transaction. Step 3. Determining the accounts involved. Next, let's identify which accounts are affected by this transaction. Account 1. Bank account. This is an asset account because the business receives cash from the sale, increasing its cash balance. Account 2. This is a revenue account because the business earns income from the sale of flowers. Step 4. Deciding debit and credit. Now let's determine which account to debit and which to credit. The bank account is debited because the cash balance and asset is increasing. An increase in assets is always recorded as a debit. The sales account is credited because the business's income revenue is increasing. An increase in revenue is always recorded as a credit. So we'll debit the bank account and credit the sales account for $1,200. Step 5. Recording in the journal. Finally, record this transaction in the journal with the following details. Date. Enter the date the sale was made. Accounts. Write the names of the accounts involved, bank account and sales account. Amounts. Enter $1,200 as a debit to the bank account and $1,200 as a credit to the sales account. Description. Add a brief explanation, such as cash sale of flowers to a customer. Let's now move on to the 8th transaction for Neelam Sultan's florist business. This one involves a credit sale, so we'll carefully explain each step. Transaction 8. Credit sale of $800. Step 1. Identifying the transaction. In this transaction, Neelam delivers a large order of flowers to a corporate client. The flowers are worth $800, but the client has agreed to pay later within 30 days. This is classified as revenue because it's money earned from selling goods, flowers. However, since the customer hasn't paid yet, the business records the amount as trade receivables, which is an asset representing the money owed by the client. Step 2. Checking the details of the source document. The source document for this transaction is the sales invoice issued to the corporate client. The invoice provides important details, such as the date of the transaction, the total amount owed, $800, a description of the goods delivered, e.g. floral arrangements for an event, the payment terms, e.g. payment due within 30 days. Ensure the invoice is accurate before recording the transaction. Step 3. Determining the accounts involved. Let's identify the accounts affected by this transaction. Account 1. Trade receivables account. This is an asset account because it represents the money the customer owes to the business. Account 2. Sales account. This is a revenue account because the business earns income from the sale of flowers. Step 4. Deciding debit and credit. Now let's determine which account to debit and which to credit. The trade receivables account is debited because the amount owed by the client, an asset, is increasing. An increase in assets is always recorded as a debit. The sales account is credited because the business's income revenue is increasing. An increase in revenue is always recorded as a credit. So we'll debit the trade receivables account and credit the sales account for $800. Step 5. Recording in the journal. Finally, record this transaction in the journal with the following details. Date. Enter the date the flowers were delivered. Accounts. Write the names of the accounts involved, trade receivables account and sales account. Amounts. Enter $800 as a debit to the trade receivables account and $800 as a credit to the sales account. Description. Add a brief explanation, such as credit sale of flowers to corporate client, invoice number 789. This one involves paying off part of a liability, so let's break it down step by step. Transaction 9. Payment of $1,000 to supplier. Step 1. Identifying the transaction. In this transaction, Neelam makes a partial payment of $1,000 to the supplier from whom she had previously purchased flowers on credit from transaction 3. This is classified as a liability payment, reducing the amount owed to the supplier. The business uses cash to make the payment, so the cash balance decreases. Step 2. Checking the details of the source document. The source document for this transaction is the receipt provided by the supplier. This receipt confirms the date of the payment, the amount paid, $1,000, a reference to the original credit purchase, e.g., invoice number, confirmation that the payment was made. Always verify the receipt details before recording the transaction. Step 3. Determining the accounts involved. Now, let's identify the accounts affected by this transaction. Account 1. Trade payables account. This is a liability account because it represents the money owed to the supplier. Since Neelam is paying part of the amount owed, the liability decreases. Account 2. Bank account. This is an asset account because cash is used to make the payment and the cash balance decreases. Step 4. Deciding debit and credit. Now let's determine which account to debit and which to credit. The trade payables account is debited because the liability, amount owed, is decreasing. A decrease in liabilities is recorded as a debit. The bank account is credited because the cash balance, an asset, is decreasing. A decrease in assets is recorded as a credit. So we'll debit the trade payables account and credit the bank account for $1,000. Step 5. Recording in the journal. Finally, record this transaction in the journal with the following details. Date. Enter the date the payment was made. Accounts. Write the names of the accounts involved, trade payables account and bank account. Amounts. Enter $1,000 as a debit to the trade payables account and $1,000 as a credit to the bank account. Description. Add a brief explanation, such as paid $1,000 to supplier for previous credit purchase, receipt number 456. Let's move on to the 10th and final transaction for Neelam Sultan's florist business. This one involves the owner withdrawing money for personal use, so let's break it down step by step. Transaction 10. Neelam withdraws $500 for personal use. Step 1. Identifying the transaction. In this transaction, Neelam withdraws $500 from the business bank account for her personal use. This type of transaction is classified as drawings, which represents the owner taking money out of the business for personal purposes. The withdrawal decreases the business's cash balance. Step 2. Checking the details of the source document. The source document for this transaction is the bank withdrawal slip or bank statement, which confirms the date of the withdrawal, the amount withdrawn, $500, a reference to the transaction if necessary, e.g., owner's withdrawal. Always check the document to ensure the details are correct. Step 3. Determining the accounts involved. Now let's identify which accounts are affected by this transaction. Account 1. Drawings account. This account is used to record withdrawals made by the owner. It reduces the owner's equity in the business. Account 2, bank account. This is an asset account because cash is being withdrawn and the cash balance decreases. Step 4, deciding debit and credit. Next, determine which account to debit and which to credit. The drawings account is debited because drawings reduce the owner's equity and a reduction in equity is recorded as a debit. The bank account is credited because the cash balance, an asset, is decreasing. A decrease in assets is recorded as a credit. So we'll debit the drawings account and credit the bank account for $500. Step 5, recording in the journal. Finally, record this transaction in the journal as follows. Date. Enter the date of the withdrawal. Accounts. Write the names of the accounts involved, drawings account and bank account. Amounts. Enter $500 as a debit to the drawings account and $500 as a credit to the bank account. Description. Add a brief explanation, such as owner withdrew cash for personal use. Thank you, students, for watching and staying with us throughout this lesson. Today, we worked through 10 very simple transactions, and we recorded them manually in the General Journal. Remember, one of the most important rules in accounting is that at the end of your work, your total debits must equal the total credits. This ensures your books are balanced and accurate. In the upcoming lessons, we're going to explore computerized accounting software like QuickBooks, Xero, and Sage. You'll see how these same transactions are recorded in modern systems, making the process faster and more efficient. But that's not all. We'll also move on to much more complicated transactions and learn how to record and post them into ledgers step by step. You're building strong foundations, and soon you'll be tackling advanced scenarios with confidence. See you in the next lesson. Until then, keep practicing, stay focused, and don't forget to like the video and subscribe to support us. Have a great day.